Home buying intentions rise. Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. Grab your stein of coffee because we're going to have a look at the Household Spending's Intention series, the latest one from the good old Commonwealth Bank of Australia. And in it, well, home buying intentions rise. Everyone, more people are intending to buy a house. So let's have a look at the Household Spending's Intention series. And this is the summary. The Household Spending Intention series for March 2021 showed improvements across 5 of the 7 spending categories. So we want to spend more, with strong increases in home buying, travel, entertainment, education, and motor vehicle spending intentions. Health and fitness spending intentions consolidated recent gains in March, while retail spending intentions were lower. However, it must be noted that we are now experiencing significant base effects, with the distortion in spending intentions that were evident at the start of the COVID period in March last year. So housing is up, or home buying is up, retail is down, motor vehicles are up, entertainment up, travel up, education up, and health and fitness is flat. So home buying spending intentions. Home buying spending intentions increased in March to a new series high. While part of the strength reflects the decline seen at the start of COVID-19 period last year, the strong increase in March reflects both an increase in home loan applications and Google searches, because this is what this data is based on search results and other bits of things brought together. But you can see here, there you go, it's rocketing up. We continue to expect the home buyer market to be a key source of support for the Australian economy in 2021, driven largely by the very low level of interest rates. As we stated in last month's HSI report, residential property prices in Australia are expected to be up 8% in 2021 and 6% in 2022, with house prices expected to be 9% higher this year, coming from the CBA. Now remember, when we had predictions of 30% falls coming from the banks, the Reserve Bank modelling 40% falls. And so it's amazing what government intervention in the economy can do, everyone. It really is. Retail spending intentions, and it's still up, but going down. The pace of retail spending intentions declined in March 2021, reflecting the jump in retail sales at the start of the COVID-19 lockdowns 1 year ago. The year to March 2021 saw a wide range of spending patterns across different sectors of the market. Relative to March last year, strong increases were seen in spending on clothing and footwear, department stores, furniture and home equipment stores, hardware stores, jewelry and watch stores, luggage and leather goods, beauty stores and barbers, not me, cosmetic stores, health spa, digital apps, everything. Some major categories, however, saw declines in the year to March, including grocery stores and supermarkets, duty-free stores, pharmacies, and stationery office supplies. Travel's going up. I guess, well, this is from March, before we're suddenly having all these lockdowns again. Travel spending intentions jumped higher in March, partly due to the start of the collapse seen last year, but also due to an increase in travel-related spending in the month. For the year to March, spending intentions increased noticeably for amusement parks, aquariums, camper and recreation vehicle dealers, hotels, motels and resorts, motorhome and RV rentals, sport and rec camps, tourist attractions, trailer parks, and campgrounds and car rentals. Decline was seen in the annual pace of spending for airlines, cruise ships, timeshare travel agents, and bus lines. I wonder, are there any publicly listed camping businesses, like campgrounds, that have to be? Perhaps a market there to look into. Health and fitness spending intentions, it's smooth, still going up, a little bit down. Health and fitness spending intentions were largely unchanged in March, consolidating the gains seen since the end of 2020. While actual spending continues to rise, Google searches were down. Health and fitness spending intentions were very volatile throughout 2020 as the impact of COVID-19 and the various lockdowns across the states had a significant impact. This volatility will now likely be reflected in the annual changes throughout 2021. For March 2021, the largest annual increases in spending was seen for sports, clothing, chiropractors, dentists, doctors, hospitals, nurses and personal care, optometrists, podiatrists, bicycle shops, professional, sport, golf courses, private and public, and sports good stores. Entertainment spending intentions. There you have it. Look at that one. Entertainment spending intentions were also sharply higher in March as the base effect from 2020 came into play and as spending increased in the month. Some of the biggest improvements in spending on the year for March 2020 included on-premises drinking establishments, restaurants, fast food outlets, boat rentals, bowling alleys, cable TV, movie theaters, dance halls, studios and schools, digital books, movies and music theater venues. In contrast, some weakness is evident in spending in off-premises alcohol, digital games, and video game supplies and establishments. Education. Education spending intentions continue their recovery in March, with the number of transactions improving even while Google searches and value of transactions declined. In terms of transaction volumes, increases were seen in the year to March for colleges and universities, secondary schools, and trade and vocational schools. In terms of transaction values, increases in the year to March were seen in correspondence schools, secondary schools, and trade and vocational schools. This was offset by decline in business and secretarial schools and colleges and universities. Motor vehicle spending intentions. Motor vehicle spending jumped higher in March, while Google searches were little changed. Motor vehicle purchases and motor vehicle loan applications both increased in March 21 relative to March 20. The changing use of public transport, supply shortages, and changing patterns of work are all supporting an improvement in motor vehicle spending intentions. The ongoing improvement in the housing market is also expected to support the outlook for motor vehicle spending, as increased household wealth can translate into increased demand for new or used cars. There is the wealth effect. I've got this $1 million house. I can't park my crappy old Honda Civic out the front. I need a nice car. Don't think it doesn't happen. Don't think those conversations don't occur, everyone. So, predictions of an ending boom. That's what we were looking at yesterday. You know, with articles like this from the ABC. Housing boom may be halted by regulators or economic trends, analysts warns. Property prices could increase by double digits this year, analysts say. The trend could continue until the end of 2022. However, after that, there's a chance Australia's multi-decade property boom could end. So in some regards, what we're seeing here with the spending intentions is lining up with these predictions of a tapering of the never-ending property boom in 2022. What do you reckon, everyone? It really depends in which sector you're in, what area you're in. You know, if anything, for all of these different news articles and things we're looking at, you have to be, skeptical. And what are the solutions? Amazing Randy, guys, always be skeptical. That's the one I'm pulling out for this one here. What do you think? Because, I mean, this is Google search results. It's not locked in, but it's combined with credit card and other data, transaction data that the CBA says. And do you think the wealth effect will actually manifest if houses continue to be robust? If we see 9% growth, I think people will rush out there. What do you reckon? Let me know your thoughts and opinions on that one in the comments down below. Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us buying shares by signing up for Self-Wealth or Stake. You can help us with crypto trading by joining Independent Reserve using our referral link. You can support us using any of our other referral links at Amazon, eBay, Independent Reserve, Aussie Broadband. You can buy merch from Heiser Says. We have Pocket Squares that you can find on our own blog, or you could use Gold Pass or PayPal. Take care. I'll see you next time. Bye for now.